All right, guys, welcome back to the Independent Investor Channel. This is going to be full transparency on self-directed Roth IRA number 2. We're going to drop you into the portfolio here, show you the actual ticker symbol, the number of shares that we have, and the actual dollar amount in each of the holdings. So hopefully you guys appreciate the transparency, show you actually what we're working with as we're trying to get the portfolio number 2 up to that $100,000 threshold. That'll be big for us. But I'm going to drop you into the portfolio right now, guys. Please enjoy. All right, guys. So welcome into portfolio number 2. This is the self-directed portfolio number 2. These portfolios, you guys know I've got 2 of them. They are built to complement each other to a certain extent. So where I would own a particular stock in this portfolio, the one rule that I kind of abide by is I don't own the same stock in the other portfolio. So you're going to see really a fresh look at the holdings within this portfolio. I really enjoy the heck out of doing these, guys, and you can cross compare for yourself the performance in this portfolio. These stocks, you know, as an investor for such a long time, this is a portfolio to the untrained eye. This portfolio might appear as if it's, severely damaged, which it's incurred a little bit more red than I would have liked to have seen. But I do come back to the realization that unrealized loss in a portfolio is just unrealized until you hit that sell button. And I think that's what a lot of people fall victim to if they're looking to invest and they expect their stock holdings to go up every single day or over time, not float down into a negative for them. I think you need to adjust and align with a little bit more of a realistic expectation, because if nothing else, this is proof of what actually goes on in a portfolio while it's working. This is part of what I talk about with no portfolio being perfect. No portfolio needs to be the same. You guys may look at some of these holdings and say, wow, I would never invest in that. What's Ryan thinking? Or wow, this is interesting. Why did he choose this? And that's the reason why we do these portfolio rollouts, is to just kind of show how individuals are seeking exposure to the stock market. I think that needs to be more available for investors out there that are curious to see how folks are seeking out their exposure and becoming a participant in the stock market. I think that's just critical. And so as we comb through this, this will be, again, a full disclosure. You guys can see the ticker symbol. You can see the share amounts. You can see the amount of dollars that I have allocated to each of these holdings. You can see whether or not we've got some unrealized profit or unrealized loss in each of these holdings. These are holdings that I've placed in here that are, the idea is that they're longer positions with an emphasis on dividend investment income. So pretty important there. But real stoked about the new position added in AbbVie. Here it is, the first one. Albemarle, I should have never sold. I may enter back into this position as well. I sold it to take some profits, and I never really should have. I really like the company. I like what they're doing. And it's tough to find those single stocks to give me that materials allocation that I do insist upon. I try to have at least 3% of the portfolio toward materials, and maybe the best way to do it is just to buy the Vanguard ETF for materials and just not worry about it. That's kind of how I seek my utilities exposure. But this company I really like, and I'll be actually adding this back into the portfolio probably this week. No harm done, no big deal. Took profits, not going to cry about spilt milk, but I think it's outperformed since I did sell the stock, which happens. No big deal. Costco, one of my favorite companies. I bought this on the slight dip when the market was getting kind of cranky there, and came off its bits and put the long position back in there at 10 shares. Which has come up a little bit there, 3 points. It's come up, and Cisco's been a real drag. I may look to add to this position. Right now, I'm exercising my right to just hold it, which is fine. Nice dividend payer. We're almost up to a free share that's been accumulated here. I know I took a 50 share block initially when I purchased the position, and then down to Corteva, which is the ag play that spurred off of Dow DuPont at the time. Now it's DuPont and Corteva. So you're seeing kind of an after effect of what happened when Dow went ahead and resplit from as Dow DuPont. And rendered these three companies as individuals. They're all three just killing the portfolio, to be honest with you. But I'm taking them into deep water and I'm monitoring them. I have no problem with this. Corteva is really the one that I'm most intrigued by, to be honest with you. And so I'm not so worried about this underperformance. I'm fine with it. Relatively small position, and I'm okay with that. Added a base back into Chevron here because I wanted some oil in here, but I've already mentioned the over allocation to energy, and I wouldn't choose to do that. I really wouldn't. If I was going to be overweight any sector, I would choose to be overweight in technology, healthcare, financials, industrials. Those are some of my absolute faves. And I wouldn't choose to be overweight energy, but for right now, this is just kind of how it's shaken out. But I did want to have some oil in this portfolio, and Chevron was really the best that I could find. I do have a lot of favorites in oil. I really do. I think there's a lot of attractive companies right now. Valero being one. ConocoPhillips does look attractive. Occidental Petroleum, just to name a few. But I just can't add any more oil exposure to that. I know my limits, and I'm over my limits right now. General Electric, we're obviously letting this position continue to work out. This is my new addition. I'm very, very excited about this addition. I mentioned this on the live stream, I think last week, that I did end up punching this position in for Honeywell, and this just a great. I want this to be an anchor in this portfolio, just like the UTX position is in portfolio number one. Honeywell is just a boss. This is a position that I can own for forever, and that's absolutely one of those things that I look at in a company. Is this a company that I'm going to be happy with 10 years plus down the line? And Honeywell fits the bill. Next is Intel. This gives me some more technology exposure and a legacy chip maker. I'm happy with that. Finally, JP Morgan is starting to really do well for me. This is one of my largest positions in the total overall portfolio, to be honest with you. This is a big position at just over 41 shares. Biggest bank, this is the bank that makes the list for my stocks to own forever. So you can see here, I do own 4 out of the 5 stocks that you can own forever. Procter & Gamble, just based on valuation, is the one that I do not own anymore. Looking for a real pullback in Procter & Gamble, is I can't stomach that valuation right now. So we are void Procter & Gamble, but we do own the other 4 stocks to own forever. Here, Kraft Heinz, waiting for that position to kind of come back. 3M companies, we plussed up on that position by 8 shares. I'm very happy to do that. And this being a cornerstone in the industrial sector really helps boost my industrial exposure up to overweight right now. And I'm not so concerned about this being overweight, but it's not optimal, okay? It's really not. I don't like to be overweight in any one given sector. But industrials is one of my top 4. It's really one of my favorites. And there's some industrials that I have earmarked that I wish I could buy, but I can't put any more industrials exposure into the portfolio. Cummins is the one that really comes to mind as far as seeking out more industrial exposure, which I just can't justify at this particular point. Merck is a liquidation, and Nextera, a couple liquidations. Pepsi's really been an outperformer this year for me. Very satisfied with this. So I've got the brother and sister in the large beverage category. So Pepsi is here. That's really good. Pfizer is another good one, where we've got on the healthcare side of the house. I need to add some more healthcare exposure into the portfolio here. Raytheon in the defense sector. You guys know my thoughts on the defense subsector of industrials. That's very important. State Street in the financials, we're allowing that to come back. I think that it will. Nice dividend payer in State Street. Asset manager. satisfied with this, unsatisfied with the performance, obviously. Really thought we had that licked on valuation, but that's what happens sometimes. You can do all the research in the world and enter into a stock to only to have it not work out for you. Welcome to the wide world of investing in the stock market. That's just the way it is. That's the environment we live in. If it was easier than that, everybody would do it. AT&T 59 shares here in the telecom space. Obviously one of the highest dividend payers in the portfolio. You guys may have noticed that I took a 5-share profit off of this. So cut the position back. Really have owned this for years, actually, but decided to trim a little bit in the telecom, put some of that money more to work in Disney, as I feel like they're pursuing more of the avenue that I want some exposure to with the streaming business. And I'd rather play that through Disney than a pure play with like a Roku or a Netflix, something like that. So I decided to allocate some of those dollars to Disney instead. TD, Toronto Dominion Bank, that's the other major Canadian bank, so one in each of the portfolios. This is what we have here, 25 shares we're looking at. United Health Group, which has actually started to finally come back a little bit. This has been an obvious dog. Tried to catch a falling knife here and failed at doing so. You usually do. And I did, so I'm having to pay for it a little bit with some unrealized loss here. No problem. I'll continue to own United Health. Union Pacific, again, in the industrial. So you guys can see here, I've got some real broad-based exposure in the industrial, pure play equipment makers, rails, subsector defense as well. So some broad exposure there, and that's just what we've got. So that's where some of the over allocation to industrials comes from. And Visa, you guys know my opinion about Visa. That's a very easy stock to own. It's made me a small fortune over the years. Visa's just an absolutely phenomenal technology company. Absolutely phenomenal. I wouldn't ask for a better. I've looked at MasterCard and I've looked at American Express both, and I just don't have that wow factor with either one of them that I do with Visa. And then we cruise down to the diversified base here to round out the portfolio. Small cap. This is the small cap. We own VBK in this portfolio and VBR in the other, one being growth and the other being value. So split those up to complement each other. This will be the diversified total market ETF here. So you can see a larger position starting to build here. $251 up about just shy of 3% there. That's fine. This for me represents a starting position here. I always want to keep this in the portfolio to give me that diversified exposure to the total market. And then I've complemented VTI with VYM in this portfolio to boost up the dividend income that's rendered here. And it's performing. I mean, I don't, anything that makes you money is a winner. I don't, you can make your money in a million different ways in the stock market. It's just, it's a money game at the end of the day. You either make it or you lose it. These are all unrealized profits, and these Verizon Communications has just been great. Absolutely one of those that I'm proud to own, and I've owned this. Now this is the second time I've owned this for years, but I haven't owned this position for very long. I just entered back into it a few months back. Wabtec was a spinoff of General Electric, and finally Wells Fargo, which was in the unrealized gain profit for just a couple days. I tell you, it's done that a couple times to me. Wells Fargo's just trying to get out of its own way. And then finally Waste Management here in, again, the industrials exposure with Waste Management being a company that I wanted to have exposure to, and I grabbed it finally after a long many years of deliberation and not owning the stock. And this is just too well run of a company not to have a place in the portfolio. So that's what we've got, guys. I really hope you appreciate this. Is portfolio number 2. Obviously a little bit more damage in this portfolio, but this is what happens. And we're going to continue to wait this out. We've got a little bit more work to actually try to strengthen this up and take an objective look and see where we can improve this portfolio. And that's exactly what we're going to do, as I'm always looking to be constructively critical over the portfolios and strengthen them up where I can. So With that, guys, I'll kick you back to YouTube. Really appreciate you kicking in on the portfolio review with me on self-directed portfolio number 2. Thank you so much, guys. Take it easy. All right, guys, welcome back to YouTube. We've just come out of the portfolio reveal. Hope you guys enjoyed. We've made a few changes within the portfolio, hopefully for the better. Obviously, this portfolio has some work to be done. We'll continue to hold true on some of those positions and always fall back on that fundamental of being an investor. And sometimes that's what it takes to take some of these stocks into deep water and realize those and make those good investments over time, guys. So if it's your first time tuning into the message, man, you want to hit the subscribe button for me, help us support the message. Leave your comments at the bottom of the video. Share the video with anybody that you think might enjoy the transparency that we provide on the Independent Investor channel. Real results for real investors, man. I'm just one of those that are enjoying the many fruits and benefits of being a self-directed investor, guys. Thank you so much for tuning into the video, and good luck in your investment future.